Here we are looking at PPHM. Done this one multiple times. Can't remember the last time I did it, but had questions come in on it over the past couple of days, and rightfully so. Great looking chart. Great bounce that's finally happened after the big gap down that it had a couple months ago. But you can see here, came down, found this bottom, and then really started to explode upwards. And one of these where there's massive liquidity in it, so you can put down a pretty nice chunk of change and not have any worries about whether or not you're going to be able to sell. So lots of good things going on for the chart. So I want to just get things updated. And a lot of people, I shouldn't say a lot, but I had a few people wondering, is this chart toast? Is it history? And given or depending on what your strategy is, that's going to kind of dictate my answer. If you're a day trade and you're bought somewhere up in this area, then yeah, you should probably already be out, and the chart definitely went against you, especially if you're hopping in up here for some sort of momentum or just scalping trade. But if you're in this for a longer term swing trade, medium term swing trade, or just in this for a longer term period, then everything is still fine. Now, how can I say everything's still fine when we've just had 2 red days in a row? Well, the first thing that I want to point out is these 2 red days in a row corresponded with a decrease in volume. And if you've ever looked at volume analysis in a textbook or ran a Google search on it, you know that decrease in volume during a pullback is exactly what you want to see from a consolidation perspective. On top of that, the chart is really hinging on this yellow line here, which is the 200-day simple moving average. This was a key level of resistance, and you can see that once it was broken here, it is now acted and hopefully will continue to act as a support level. So right now the 200-day simple moving average is valued at $1.16, and that's really going to be the key level. If this is truly a strong move and is going to remain a strong move, then the 200-day really shouldn't have any problem holding. If it does fall, then the next level that I'd be watching is going to be right around down here based off of this high here. We had a low over here, so we'll call that 95 cents. So if $1.16 doesn't hold, then the absolute must hold level, no excuses, is going to be down here at the 95-cent level, because if that one doesn't hold, then as you can see, there's no other supports until the previous lows down here, in the high 60s, and nobody wants to see it go down there. So ideally, the $1.16 needs to hold, but if it doesn't, the 95 cent is the must hold, no excuses. Now, in terms of resistance levels, I would consider this level right here, the low from this candle over here, is the first level of resistance based at $1.58, and then another one up here at $1.64, which is where the profit takers eventually stepped in. But get through the $1.64, and the next level of resistance is not until way up here at $1.94. So as this chart's already shown, lots of potential and lots of room still for upwards movement. So lots of good things going on. We just need to continue to see these support levels hold, and if they do, like they've been, then should really only be a matter of time before these highs are getting retested up here. So if there are any other questions on the chart, please let me know. If not, again, this was PPHM.